Good morning, everyone, and welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, market for treasury companies, and how to make some, or ideally, a lot of money on the internet. Loaded for discussion today, we have three important headlines to get through. First of which is Vitalik supporting treasury companies, but also mentions the risk of over leverage. Second of all, we mentioned it yesterday, Trump signing the executive order to allow crypto and private equity in 401ks. Did touch on that yesterday, but I do want to have a deeper discussion on that because I think this is tremendous news for our industry. And then last but not least, as SEC case against Ripple is officially over. The listed case has started roughly 5 years ago. Also got the latest on price action on crypto and NFTs and a discussion of where we think we are headed with the market. So definitely stay tuned for that. I have Phunky with me in the co-host seat. It is Phunky Friday. We are ready to get into it. But before we do that, just to remind our friends that nothing that we say here is financial advice. This market is extremely risky, no matter how good the price action might look. We do not know anything for sure, so please do proceed with caution and exercise your own judgment. With that out of the way, Phunky, you're an absolute legend for stepping up with me today. It is 4 a.m. How are you feeling? How are you doing? And where are you?
GM, no, hey, always happy to be here and to co-host with you, Ledge. So I am in Vegas, and as I was telling you before the show, I somehow forgot that Vegas is Pacific Standard Time. I was prepared for Mountain because I just think, oh, there's mountains in Vegas. It's MSC. And then my wife said, it's on the border of California. And I was like, yeah, it's pretty far west. But yes, I'm channeling my inner bred. I had to, summon my spirit animal. So 4 a.m. I'm doing great. I was kind of on my East Coast schedule yesterday, so I went to bed really early. I was up well before my alarm even went off. So stoked to be here and ready to have another great conversation on modern market.
Awesome. And what are you doing in Vegas? Because I don't assume that you're there for gambling reasons.
No, I'm not. Although eventually I probably will play some roulette or maybe some blackjack or something. You gotta partake in the culture, right? But actually, there's an event here called Rare Evo, and it's Rare Evo 2025. This is largely a Cardano focused event. If you look at the website, you'll see a lot of IOHK. You'll see a lot of Cardano folks. You'll see a lot of Midnight Network, which has been incubated by IOHK, although going to be built on the Polkadot SDK. Some other teams that my company Global Stake works with called Apex Fusion, which is a really cool like L2 solution. They're trying to build like a UTXO, very similar to Cardano, but then also an EVM layer. So you'll have sort of that liquidity be able to come in from Ethereum much more easily, because as we know, Cardano DeFi is not really a thing. So they're kind of building a chain to do that. And I'm here as a Polkadot emissary. Apparently, Polkadot was offered a few guest spots to come and just check out the conference. And originally, they had asked Bill Laboon, who is the VP of Ecosystem for Web3 Foundation, and really the sort of part of the reason I got involved in Polkadot was seeing his What is Polkadot video back in 2020. And they're like, oh, Bill can't go. He's got a conflict. Phunky, you're the guy. And I'm like, what? So I have to apparently fill his shoes as guest of honor. I don't know what that means, but I think Mythical Gaming is going to have a booth here. So I'll probably be hanging out at that booth for a little bit and just also going around and meeting some folks and just kind of introducing, chatting about Polkadot and whatnot. But yeah, it should be fun. It's a great, it's in Vegas. It's in Caesar's Palace, which I hadn't been in 20 years. I hadn't been in this town in 20 years. Holy crap, has Vegas absolutely exploded. It just didn't even look like the same place from when I was here. Like no longer is just the strip where it's, like this one road that everything's on. There's so much stuff here now. I basically got lost inside of a mall, inside of Caesar's Palace. Like every casino is just absolutely massive. So it's been an interesting first day, but looking forward to the conference today.
Interesting. There's been a couple reports on X and in traditional media outlets talking about the fact that visitor numbers in Vegas are going down, Strip is becoming empty. Is this a recession indicator? Is this a sign that the young people are not gambling anymore? Which I call out as utter bullshit, because the Gen Z is gambling more than ever, but most of them do that online. But what is your feeling on the ground? Do you feel like Vegas is empty at all?
No, I would not. Again, you're talking very like a one person's opinion, but no, the casino was slammed yesterday along the streets. It seemed like people were walking around. This is just of course, anecdotal evidence, but just my interpretation, like having seen those stats myself, you would think that you would see that. And I didn't get that vibe at all. It seemed, for a regular weekday, like the casino was pretty packed. There were tons of people at all the tables. So I can't imagine what peak Vegas would look like if the numbers are supposedly low, and then this is what I'm seeing on the ground. I can't imagine what it's like when it's really nutty, because that'd be insane.
You know what? I actually don't think that this is a reliable indicator anymore to look at gambling volume and anticipate a recession or drawback in the economy as a result of that. Because I feel like if anything, we are becoming more and more hyper gamblified as a society, and obviously a lot of that volume has moved online. Seen it with sportsbook betting in the US exploding, 14, 15x over the last couple of years or so. And if anything, I would argue that if people are doing financially worse and worse, and the quote unquote like barriers to entry, the accessibility of gambling is way easier. You don't have to go to Vegas. You just have to go to whatever sportsbook or online casino you want to go to and gamble. I feel like that this segment of, call it desperation gambling, people who are like, I don't have any savings at all. The economy is going to shit either way. It's just, hope for the last couple $100 that I have to bring some sort of maximum or whatever. If anything, I think it will go exactly the other way around, because it's so accessible to gamble these days. And I don't think that changes in gamble volume will indicate, or gambling volume going down specifically will indicate a recession. How do you feel about that, or how do you think about that?
Yeah, no, I know we talked about on the show probably a couple weeks ago just how, many, many years ago, the first time I ever did fantasy football, it was, you just did something on Yahoo Sports or whatever, and you set your little team and you had your thing. But now you have literally the lines and the odds and stuff like on ESPN. So it's all pervasive in terms of how much gambling has become part and parcel of the culture. And, Florida is a great example where we have Hard Rock Casino. And very quickly, once they allowed some of these online sports books, if you could just, fill in a little application on Hard Rock, they have their own. I mean, everybody has their own. MGM has their own. So you can just, to your point, download an app on your phone. You could do all sorts of gambling right there. Why would you even bother going to the casino? Like one thing yesterday, case in point, I walked around in here and I'm like, oh shit, that's right. Yeah, people can still smoke in casinos, because everywhere else in our world, or at least in the United States, maybe not necessarily in Europe, they have pretty much like eliminated smoking from indoors. This is probably the one last bastion of you being able to light up inside a place is in a casino. And it's like, why would you want to go into a casino and just be surrounded and smell and like absorb all the secondhand smoke when you can make these bets right from the comfort of your phone? So I don't think, I'd be curious to know the numbers, to your point, just all gambling. I mean, obviously that would be hard to capture that data in crypto, right? And especially your yeet exposure, and you'd break the machine. But like, just in terms of, I would love to see what it is, the apps versus people on the ground actually like going to Vegas. I don't think that that's necessarily, to your point, the best like proxy for, just the overall industry as a whole.
Yeah, I very, very much agree with that. And I did look into the CAGR of the compounded annual growth rate of the gambling industry a couple of days ago. And I don't remember the numbers. I don't want to misquote on that. But I was looking exactly for the same thing to see if there's this different growth rate between stationary and online casinos. And there's been quite a lot of statistics about Gen Z specifically. And I think it's more than 2/3, more than 70% of them who obviously prefer online gambling versus any sort of stationary gambling. But enough of the gambling talk, enough of the potential recession indicator talk.
One
It
last
is,
point though.
yeah, go
Cardinal
for it.
made a great point in the comments and said that Gen Z are gambling, but they're not drinking. And this is a place,
Yeah.
casinos are traditionally a place you come to get wrecked, because they're giving you drinks for free. They want you to stay at the tables. They want you to stay at the machines. That's a really good point. So if drinking is on the decline, and that's kind of a place where people want to go and like have a good time and have drinks while they're gambling. That's a very, very good point. So I thought that was worth noting.
Yeah, no, that's a perfect point. Maybe one last comment on that, because there's like a couple slot streamers, casino streamers that I sometimes watch when I'm extremely bored, and it's like 22, 23-year-olds And yeah, talking about like longevity, biohacking, getting a gut panel done. I'm like, it's exactly what Cardano is describing. But anyhow, let's move into the price action. Price action is looking extremely green. So let me get it up on screen. Let's enjoy that for a bit. We have Bitcoin at $117,000, up 0.26% over the last 24 hours. We have ETH at 3.9K, up 2.5% over the last 24 hours, up 8% over the week. We have the big winner, Ripple XRP, being up 8% yesterday. That is to do, obviously, with the news, which we'll get into a bit later in the show, that the SEC case against him is now officially over, also up 12.5% over the week. We have BNB up 1.5% to $788. Solana is up 2.5% to 177 US dollars. Cardano up 5%, 80 cents. Stellar up 13%, unsurprising that XLM is also moving at 46 cents. Our favorite alt major, how we like to call it, Hyperliquid, it's also had a beautiful day, up 4.6% at $41. That makes me very happy. Sui is up 3.5% to $3.80. So overall, a very green day for the majors. Let's also take a look at the meme coin side of things, where we basically see that Dogecoin is up 4%, SHIB is up 2.5%, Pepe is up 3%, Pengu is flat, Bonk up 1.5%, Trump up 2.5%, Fartcoin up 4%. Just scrolling through the list of meme coins to see if there's any bigger movement that is standing out. Definitely want to quickly touch on Rebita by Virtuals. We did speak about this agent which autonomously bought a CryptoPunk, I think it was a couple of weeks ago or so, up 140% over the month, up 87% over the last 7 days. So this run did continue, and Rebita is now trading at $190 million market cap. Pretty impressive movement on that end. Troll, we touched on it a couple of times. Also holding up pretty strongly. It is up another 6% over the day, but it had reached a higher peak yesterday at 180 mil. Now it's trading at quote unquote only 166, but still up over the last 24 hours. So I think this sums it up pretty perfectly. We have a green day for majors. We have a green day for the meme coins. And moving on to the main news of the day, we will discuss that interview that Vitalik gave with Bankless, where he was arguing in favor of treasury companies, supporting them, but also mentioning the risk of over leverage. As a second piece of news, we'll talk more on Trump signing an executive order to allow crypto, amongst other alternative assets, into 401ks, because I think this is extremely relevant. I definitely want to get into what that potentially could mean if we could see a shift from the stock market into crypto, and how that will play out immediately, but also in the long-term future. And then, as we also said at the top of the show, the SEC case against Ripple being officially over. Quickly diving into the NFT side of things, bringing that price action up on screen as well. We have Pudgy Penguins up 1%, 14.3 ETH. Let me zoom in a bit on that. That's quite, there we go. Moonbirds up 10%, 2.4 ETH. Bored Apes up 2% at a 12.1 ETH floor. Ladies up 3.5%, 2.6 ETH. So quite some good movement for the big collections. Definitely Chimpus worth mentioning, up 30% over the week, up 12% over the last 24 hours. Currently at a 0.88 floor. That price action is looking pretty juicy. And the other thing that I want to touch on is, because we haven't checked in with the ordinal side of things in a while, and Roto had that post that Elon engaged with Coinbase's animated Bitcoin Wizards post, and we've seen the Bitcoin Wizards being up 45%, 0.061 BTC floor, seen the Magic Inert Money rune up 38%, $90 million market cap. A, the Elon effect still exists, but B, also ordinals have been having, I would say, quite a lovely week. It's just an ecosystem we haven't touched in quite a while, so I wanted to provide a quick update on that. Phunky, unless there's anything from your side, I would move into the Web3 roundup to just get the news from around the space.
Just wrong question. Did I see that it was actually 0.06 for a Taproot Wizard?
Mhm. Yeah.
Wow. That's still because I saw like, oh, the price went crazy, you know, and but I didn't realize they were still that far below mint. Wow.
Yeah. Bitcoin needs to catch up to at least make it look sexy in terms of the dollar price.
Yeah. Wow. Okay. Okay. Yeah. No, I just couldn't believe I read that correctly.
But that's the Bitcoin wizards, though. It's not the Taproot wizards. Um,
Oh, Bitcoin Wizard. Okay, my bad. That
yeah,
that explains it. Okay,
Taproot
that's
Taproot
probably
wizards
where.
also up 8.7%, and they're at 0.237.
Okay, so that's above mint. Okay, that's what I had in my head was those
Very
guys. All right.
good that we were able to clarify on that. Just getting you a roundup from some other pieces of news from around the space. We have Binance partnering with BBVA to hold a client collateral of exchange, BBVA being Spain's second largest bank. We have the Ethereum Foundation pledging financial support for the Tornado Cash developer Roman Storm. They will match up to 500,000 in donations for the legal defense after he was convicted on federal charges related to Tornado Cash. The Winklevoss twins investing in Trump-linked American Bitcoin Corp. The company also recently announced plans for public listing. They purchased $2 billion worth of Bitcoin for its treasury earlier this summer. Sharplink Gaming, they posted that like a couple of minutes after we concluded the show yesterday. They're aiming to further boost their Ethereum treasury, and this time raising $200 million to do that, with shares priced at $19.5 each. Their aim is not as ambitious as Tom Lee's goal. The Sharplink, quote unquote, only wants to own 1% of all Ethereum in circulation. That is according to institutional investors. Whereas Tom Lee, and we did speak about that quite frequently, is gunning for 5% of the supply and is also currently leading in that race. Paxos Trust has been fined $26.5 million by New York State for compliance issues with Binance partnership. Charges included lack of due diligence, anti-money laundering program failures, and these issues have been apparently going on for a longer period of time. And another news related to Ripple, they are purchasing Ripple for $200 billion to enhance stablecoin services and streamline global payments. That is a Toronto-based payments platform, and that deal will also enable Ripple to offer virtual accounts as well, streamline operations, as I just said, and just make global money transfers even easier. Phunky, anything from the roundup that's catching your attention?
Yeah, Roman Storm. That's just an absolute travesty for him to have been convicted. And I know it's something weird about like a partial conviction and so on and so forth. Uh, in the blockchain association chat, people were up in arms over this. You know, we talk about Trump being sort of the crypto president and ushering in this age of crypto friendliness and so on and so forth. And they want to make him, you know, Roman sort of this martyr and say that Tornado Cash is only used for, and you know, money laundering, embezzlement, you name it, like whatever you want to call the various nefarious things we think of when people are doing things with money. When I think anybody in who is in his or her right mind, first and foremost, says this is just the coder. This is the guy who wrote and created Tornado Cash. Like he himself is not some drug cartel head who's like doing all this stuff with money laundering. We know, number two, that like by far and away cash is the number one thing that's used in illicit crime, you know, and it's way more untraceable. Three, just as an American citizen, I find it really preposterous that we have so much of our framework in the Constitution that provides us certain levels of privacy, right? And you're going to tell me that you can't have privacy of transactions, you know, in terms of, you know, we've talked about this on the show before. Just because public addresses are transparent doesn't mean you want that out there. Like Legendary, imagine like all of your accounts just suddenly be like, these are Legendary's accounts, and you just see all of like your holdings across all these various accounts, and the world can just see inside your checking account or your bank account or your, you know, that's not cool. So I just, you know, Notorious Big Bull's bringing up a good point. Like, you know, this, why not, if you're going to pardon Ross, why not pardon Roman, right? Like it just, I don't know. It seemed to me that, and I think that's just something that probably more of the cypherpunks, like they're going to have their hackles up over this. I don't think that this will probably just get brushed away very quickly, but I think it should be something that's talked about more, and just seems very unjust for that to have happened under this particular administration and watch, even though I know it's judges and judiciary is a different, component, if you will.
No, absolutely agree with that. And also, the co-executive director of the Ethereum Foundation, Wei Wang, had this to say on that: privacy is normal, writing code is not a crime, and very much in line with what you were just saying. And I think that he already has been convicted of unlicensed money transmission, but there's also other pending charges. Just that money transmission charge alone would face up to 5 years if the appeal is failing. And I think, as you said, like, mostly it sets a horrible precedence if the result truly would be a conviction, not only for privacy, but also for the DeFi sector in itself, which obviously has seen so many positive news over the last couple of weeks and months. And I feel like that would be a big step back. And in light of a broader privacy-driven discussion, I feel like that the US would set a great global example if this isn't a conviction, because we in the EU, the Europlebs, have another issue to deal with at the moment, which is that all the end-to-end encrypted messaging services, WhatsApp, Signal, Telegram, there is currently a discussion ongoing, I think 19 countries in the EU in favor of that, to remove that encryption and don't allow for private encrypted conversations anymore. Basically give governments the potential to access all of our DMs, WhatsApp chats, Signal chats, whatever it is. And I feel like that is truly horrible. So I'd be, even from a European perspective that's completely not crypto related, very grateful if, the US would take a strong stance in protecting privacy.
Not that I have any say in the matter, but yes, I would hope to see the same too, right? I mean, it's crazy to me. I didn't realize that the EU is trying to do that and take away that end-to-end encryption. And we've seen this over the years. Probably 10 years ago, when, I don't know if you remember this, there was a shooting. I think it was a school shooting even in California, and the FBI was demanding a backdoor to Apple. Like,
Yeah.
oh, we just need the key so we can get in and we can see these messages. And I was like, no, I mean, I understand, they're trying to do their job. I mean, there's always going to be some kind of middle ground of compromise. But when it comes to sacrificing, privacy, or giving away the keys to, your code, so that way you can have some, workaround, I don't know. I know slippery slope is not a good argument to make, right? But because it's a fallacy, logical fallacy, but still, it just, to your point, you're setting a precedent, and it's just going to create other avenues of attack on these, what, I guess in the US we'd call freedoms, right? Like, you should have the privacy by default.
Absolutely agree with that. And I'm glad we had the time to have this discussion. We are halfway through the show, so I think this is a good moment to get into the main headlines, starting with the first. Going to bring that up on screen. It is to do with Vitalik supporting treasury companies. That was in an interview with Bankless, which I have up on screen. And he said ETH is just an asset that companies can have as part of a treasury. It's good and valuable. He also, as part of that interview, had mentioned that it's just good to give people more options in how they can have exposure to ETH other than owning ETH directly. You have the ETFs, also have treasury companies. So he is definitely in support of that. But he also made the point saying, if you woke me up 3 years from now and told me the treasuries led to the downfall of ETH, my guess would be that they turned into an over-leveraged game. Basically, the scenario that he painted there is a drawdown of 30%. The first treasury companies get liquidated. That leads to a 50% drawdown in ETH. That causes a liquidation cascade, gets the next treasury companies liquidated, 70% drawdown. Everyone's losing trust in ETH, dumps the remainder of ETH that they were holding, and suddenly ETH is down 90% instead of quote unquote only 30% on a bigger correction move, on a bigger move downwards. I know we've been speaking about that treasury company topic for quite a long time, actually, but ultimately is the dominating narrative. It is where money is flowing into both BTC and into ETH. I think we had the stats up on screen yesterday where I showed how Bitcoin is distributed and how much is now flowing into both private and public companies. We have the very same thing for ETH, where now strategic ETH reserve companies are holding $11.8 billion worth of ETH. That is 3 million ETH. ETFs, ETH ETFs are holding $5.8 million. So now this figure went over 50%. Basically, more than half the money, which is in ETH ETFs, is not, that's not the right way to put it. So we have $22.6 billion in ETFs, and we have $11.8 billion in strategic ETH reserves treasury companies, and they are catching up to the ETFs. And Phunky, I wanted to bring you in with one specific thing into that, because last Friday, when we were talking about Michael Saylor and strategy, you gave this fantastic breakdown on how strategy is different from other treasury companies, and how they are basically trying to strike this balance between having various product offerings that are interesting to different market participants on the one hand, but also on the other hand, actually caring about the share price and the potential dilution, whereas that doesn't seem to be the case with a lot of other treasury companies. But the risk that Vitalik is painting is obviously the over leveraging risk. So that's not necessarily the share price dilution, but then starting to borrow against your ETH, against your BTC, whatever you have, just adding more to that. Is that leverage risk something that you see specifically as the first question? And then I have a follow-up on that as well.
I mean, I understand where Vitalik's coming from, of course, right? And I don't think, and when I held up my finger, I was like, yet. We don't see them doing that yet. And I think that that's the safer play, honestly. Like, if they're going to issue shares and dilute their shareholders in order to raise funds to then purchase more ETH, that's not leverage, right? Like, you're just, the other shareholders are okay with it or not. They're going to sell their shares, or they're just going to hang on and say, yes, that the multiple is going to drive the price as the MNAV climbs, that basically it's just going to, it'll outdo the issuing of shares. You know, I don't think that we'd see a whole lot of leverage being used. And granted, this ETH treasury strategy stuff is all very new for some of these companies. I met a couple guys, 3 guys. I was at the Polkadot Hacker House back at the end of February for ETH Denver, and they were saying we're building an on-chain MicroStrategy. And of course, as the Bitcoiner, like in my head, I'm like, that's not going to work. That's not going to mean anything, right? But now I'm thinking, man, I hope those guys really got it off the ground and they were buying and scooping ETH, especially during the drawdowns when it was, you're really beat up, $1,200, $1,400. Because if they're doing something like that, you know, and now here we are, ETH is clearly in demand, the price is rising. But what I don't think is happening, and is a lot of leverage being used, and here's why. You know, talked to a lot of people in the industry in my role at Global Stake, and we had a meeting with, and I'm sure you guys know him, Tyson from EtherFi. And a couple weeks ago, when we were chatting with Tyson, he was saying one of the challenges is that all this ETH is being sucked out of the market and it's not being deployed in DeFi. So a lot of these companies are coming along, and so if you look at the borrow and lend rates on Aave, for instance, like Tyson pulled up a chart that day during our meeting a couple weeks back, and we had these massive spikes because what's happening is there's not enough ETH to go around, which is a good sign, right? Like for the price and the kind of buy pressure it's putting on it. But basically, these companies are vacuuming up all the ETH. You know, Brett talked about they're actually they're buying more ETH than isn't even being issued. So now we're kind of back to like the ultrasound money meme from the last cycle. And if that's going to be the case and they're not deploying it, I don't see how the ETH gets leveraged unless it gets leveraged through TradFi channels where now, okay, we've got a bunch of ETH. Can we take credit, you know, from the system, from TradFi, and then go take that money and go buy more ETH? So I guess there is that kind of leverage. But what we don't see is a lot of on-chain leverage where they're deploying this and then getting sort of a liquid staking token and then going around and messing in DeFi and, you know, getting really complicated. At least so far, we don't see that. Is that a real possibility? Sure, this is crypto. Anything's possible. We're all a bunch of degens. That may very well be a point in time where some of these treasury companies think, oh, we've got this war chest of ETH. How do we better deploy this for greater capital efficiency? So, you put all that together. Is it a possibility? Yes. Is it something that I would worry about? No. When you guys started talking about Bitmine and SharpLink, like I went and bought some just to have some exposure to those, even though I don't need a lot. And this gets back to another point I wanted to make real quick, was just that, well, I guess we'll talk about that in the broader conversation with Trump and signing the stuff in the 401ks and whatnot.
Gotcha. No, that's a fantastic point, especially on both the ETFs and the strategic ETH reserve companies just absorbing so much ETH. They're not available in DeFi anymore, or not yet available. Just to put those numbers into perspective, over the last 30 days, if you look at the ETH supply dynamics, 80,000 ETH has been issued. 1.4 million ETH went into strategic ETH reserve companies, and 1.5 million ETH went into ETFs. And yes, 7,000 ETH have been burned, but that's not relevant in the big picture. So we have almost 3 million ETH that got sucked out essentially over the last month versus 80,000 ETH that have been issued. That's a 37.5x multiplier. So like 37 times the amount of ETH that has been issued over the last month has been absorbed by either companies or ETFs. And I think parts of that we'll see being mitigated once there's like staking for ETFs. So that is at least then a yield bearing component, but it's still not, I would say, a core, like it's not ETH that's participating in core lending or core DeFi activities, obviously. Then you still have companies like SharpLink, which you just mentioned, have clearly said they want to look into three things: ETH staking, ETH restaking, but also other strategies to farm yield. And then I think you're getting to the territory where we could see some lending going on, and hence maybe if someone wants to do a little borrow lend loop, some leverage added as a result of that. And that obviously, if others were to copy that playbook and escalate, like this could lead down that liquidation path that Vitalik has been describing. But I think we are not even at the start of that at the moment.
And I'll just say, even if we were, I think that we wouldn't get the cascades that would bring it down 90%, because to the point of the conversation yesterday you guys were having, ETH is Wall Street's darling, right? Like because of the chain liveness, because it never goes down, like they will be the buyers of last resort. These ETFs, I mean, if you gave them a chance to scoop up and back up the truck and get a bunch of ETH at cheap, yeah, I think I just don't see it being to a point where it gets to 90%. If there is 90%, that's where the smart buyers are all be stepping in and saying like, oh, wow, what other time am I ever going to have this opportunity again?
Yeah, no, I agree. That is a very fair point. The other question I wanted to ask you on that before we move into the next headline is, so I said you've been describing Strategy's plan and the way they structure their offers. And it seems like nobody in the market is copying this playbook at the moment. The ETH treasury companies are more dilutive at the moment. Why do you think that is? Is it just because, as you said, ETH is Wall Street's darling and you just don't need to structure offers like that, and you can, at the moment, just dilute shares and buy more ETH, and ETH goes up and that works? Or is it something specific about Bitcoin that you would argue, where Saylor has to structure that because he operates with a completely different size than even the ETH treasury companies? What's your thinking? What would your hypothesis be there?
The latter, for two reasons. One, Saylor has basically generated an absolutely massive flywheel effect, where not only you could argue, has he or MicroStrategy brought about a great bit of the legitimacy of Bitcoin as an asset, right? As an asset class unto itself. I think, because he went and made that announcement back in 2020. That's when I first bought MicroStrategy, right? So like this has been a process that's been going on for 5 years. I think the next big step was, of course, the ETFs becoming a thing, right? And that was what, January of 24 when we started talking about this, or was that only this year? I can't even remember, crypto time warp. But like, the point being, I think strategy is on a completely different level at this point because they have generated so much value by effectively becoming a Bitcoin treasury company, not a, business operations where they focused on, a SaaS and all that other stuff that they used to do and make like a couple $100 million a year. So they have become such a massive whale that they are now they have the ability to offer these structured products to help drive more Bitcoin acquisition, more to their bottom line because of the changing in gap and allowing this to be not just constantly written down. I just don't think that SharpLink or BitMine, which are the two big names. I mean, SharpLink was a gaming company, right? Like, this is something that's being repurposed into a very different vehicle. Go look at what SharpLink's price was during the .com bubble when it was absolutely insane. Like, it's probably never going to get to those highs again, right? So these are different companies that effectively have been repurposed and retooled. I don't think that they have the sort of cachet that MicroStrategy has earned over the last 5 years, right? It's got a lot of clout now because economically the thesis is playing out. It has the ability to tap into those TradFi markets, like I was alluding to previously, and saying like, oh, hey, lend me a bunch of money so I can go and buy more of this stuff. I think until they get to that point, they're not even in the same conversation. And I don't think it's necessarily a Bitcoin ETH thing, although it is, in my mind, that because, or partly that, because being sort of like a Bitcoin is now starting to stand out as something that's completely separate. It's a one-trick pony, right? Do we ever get to that level where we have DeFi and Bitcoin and all these other things that Bob and other companies are working toward? Or is it going to be just this, leave it alone? It's going to have 10-minute blocks. It's just going to transfer value. That's all it needs to do. Versus ETH is different, right? It's a smart contract platform. And because of its, resiliency, because of the fact that it has that first network mover advantage and everything else, this is why Wall Street loves it. So I don't know. I just don't see it being something that's happening now. Could it be in the future? Maybe 5 years, like you give it time like Saylor had for strategy? Yeah, I mean, it's entirely possible.
Yeah, all very, very good points. And the only thing I would add to that is that from the perspective of the other treasury companies and other assets and whether they could potentially cause some sort of liquidation cascade that then has like knock-on effects on the bigger majors. To the extent that also the Terra Luna did when it collapsed, and obviously because that company was holding massive BTC and ETH reserves as well. I just don't see that happening. I feel like, look at something like Hyperliquid, for example. Hyperliquid is quote unquote just a $14 billion market cap token in an industry that's now almost 4 trillion. Terra Luna historically was so much bigger compared to the total market cap of crypto that it was carrying systemic risk. But now, especially BTC at 2.3 trillion, ETH at 470 billion, the other players are just, I would argue, too small for that. Like, even if BNB is massive, I mean, let's not talking about like Binance collapsing or anything, but like even BNB at $110 billion is what? That is, oh my god, my math, 2.5% of the total crypto market cap. That is nowhere near the size that Terra Luna had historically to what the market cap was at that time. So that's also another risk I'm really worried about.
Yeah, I think that the market overall has grown, and more importantly, that it was just a different time, right? Like, I mean, when Terra Luna happened, you literally had Citadel, which is one of, hunting them, like trying to liquidate Do Kwon. That very much could have been avoided. Yes. Was it absolutely 100% perpetrated and done intentionally to destroy them and like 3 Hours Capital, 3AC and stuff like that? Yeah, like that blow up was very, very intentional because you could manipulate the markets back then, to your point, much smaller, just the whole market, far fewer coins, all of it, where it's just changed so much, the dynamic, and then the whole industry has grown. It would be very hard to do that now, which is good.
Indeed it is. Moving on to the next headline, which is to do with Donald Trump signing the executive order to allow alternative assets for 401k investors. Just sharing this fact sheet from the White House on screen. So today, President Donald J. Trump signed an executive order to allow 401k investors to access alternative assets for better returns and diversification. And promoting retirement security through diversified investments is a big point of that fact sheet. It says that President Trump wants to give American workers more investment options in order to attain stronger and more financially secure retirement outcomes. More than 90 million Americans participate in employer-sponsored defined contribution plans, and most of those are currently restricted from investing in alternative assets, unlike wealthy investors and retirement plans for government workers. Alternative assets, such as private equity, real estate, and digital assets, offer competitive returns and diversification benefits. Regulatory overreach and litigation risks have limited ERISA governed plan fiduciaries from including alternative assets in their investment portfolios, hindering workers' retirement growth. And President Trump, as the final point, is expanding access to these assets to ensure a dignified and comfortable retirement for all Americans. And this is, as we said it also on the show yesterday, a massive, massive market, more than $12 trillion of money sitting in 401ks, obviously new money flowing in constantly. And also the executive order is just the first step. So it won't change the policy. It will clarify his position to the rest of the government, is a commentary by Jared Seiberg, financial services policy analyst at TD Cowen Washington Research Group. So it will still require the agencies to craft new rules that could take into 2026. But nonetheless, I think this is massive, massive news. I have a couple specific questions for you, Phunky, but I'm curious to hear your initial reaction first and then get into these.
Yeah, no, it is absolutely massive news. I think that it's Wall Street, right? It's not all of a sudden like they're going to pump the bags immediately. These things are going to have it's going to just take a long time to play out. Like, how quickly will it be before, say, a Franklin Templeton, or like you name any other kind of like 401k provider, that actually structures the funds, right? Because a lot of times, for those who are just not used to what like a 401k offers here in the US, just a quick primer on that. Normally, if I have a 401k and I have access to it, I can only buy into these funds that are pre-structured, and they're usually, I can't just go buy like Bitcoin. Like there's not a way to do that in a 401k. So there might be a growth focused digital assets, like a fund that gets structured, and it's going to be weighted 70% Bitcoin, 20% ETH, and then maybe a little bit stuff like Sol and a small basket of other things or like that. I think it's going to be a long time before we get to those kinds of products being offered by the actual 401k companies that then the end user can go and select. I think the other thing too, that's just a top of line thought, is in addition to them slow rolling out some of these as an option, is then you have to think about the education component for all the traditional IRAs out there, right? Like Matthew, I don't know if he's listening to the show or not today. Like, God love him. He's the exact kind of person we need.
You.
Because he is the type of who's been sort of an advocate, going out there and knocking on doors literally in North Carolina, trying to talk to other financial advisors and be like, hey, do you have a digital assets play? Do you have something where you can actually like talk to your investors, your clients, about how this is going to reshape finance? And you need to get ahead of that. And I think, like, just the other day, within the last few weeks, Aaron and I were watching the news, and there was a guy who was talking, and they were talking about digital assets, and it was Trump had signed something, but it was just some local yokel who just was like a guy who's a financial advisor. And he's saying things that were just making me pull my hair out because they were just untrue. Like, the guy's asking him, he's throwing up these softball questions. Like, yeah, but it's still a super risky space because it can go down 80%. And like, literally the guy's like, yeah, in a day. And I'm like, Bitcoin is not going to go down 80% in a day, bro. Like, so we need that education to also kind of trickle down. So we have an army of Matthews out there, right, who are doing the good work and helping their clients understand what's to be gained by being involved in the digital asset space as investors.
Talking about an army of Matthews, we have the original one with us up on stage. Matthew, welcome to the stage. Take this in whatever direction you want.
Good morning, everybody. Thanks for having me. It's good to see y'all. I think, to Phunky's point, I was at an investment advisory office here in Raleigh about 2 weeks ago, and we had about an hour session together, and it was really great from an education perspective. And one of the big takeaways that I kind of was able to give them was, they say, how do we talk to people about this? And I said, well, the first thing you need to do is really, sort of provide a welcoming environment for these people, because they don't feel like they have permission to be able to talk about their digital assets with you. They think you're going to tell them it's a bad idea, that they're going to be embarrassed for talking about investing in something like this. And you need to be really accepting and really open to the fact that these people have these assets. And that's going to be how they then look at you as a trusted advisor and not an adversary, and how you can, build that relationship and deepen that relationship. Because now, as Phunky is pointing out, like, this is all being legitimized in a way that we need to be, positive and forward thinking about it. It's not a scam coin. It's not for, drugs and illicit activity. It's not for that stuff anymore. It's a legitimate asset class, and it belongs in everybody's portfolio, whether it's 1% or 2% or whatever makes the most sense. And so I think it's just that education is really, really important. And 7-8% of the world right now invests in cryptocurrency, and now 401ks are going to be able to take just a little bit of that, and it's going to be really awesome to see. So glad you all are talking about this, and hope you have a good Friday.
Thank you so much. Follow-up question for you on that. Absolutely agree that this education is like massively, massively important. It also took years, if not even decades, for ETFs to gain the adoption that they have right now. And if you say that, X% is a healthy amount to have in crypto, in digital assets as part of your portfolio, it doesn't matter if the number is like 1, 2, 5%, as you said, but how long do you think that it will take until this becomes as you said, like a consensus take, something you can share without being embarrassed, that you say, I put 5% of my 401ks into digital assets? Do you think that this is something that will take 5 years, 10 years, more than a decade, if you were to make a guess?
I think market sentiment drives a lot of that. One thing I heard yesterday was that fundraising is a lot easier when markets are at all-time highs, which is kind of an irony, right? So when, you've seen that meme about people lining up when Bitcoin's 120,000 and there's nobody there when it's 70,000, right? Like, that kind of momentum is really, really important, but it's also, the perception of a lot of people. So I think it's going to start slowly. This is a very kind of slow and then all at once. Like, you'll look and it'll start and there won't be that many. And then 6 months from now or a year from now, there's going to be billions of dollars allocated to this stuff in people's portfolios.
And another question for you on that, because I know what a 401k is, obviously, but I don't know the exact inner workings of that. Could we even see like an initial reallocation of assets into crypto, like in existing plans, where then redistributing however their 401k is allocated into digital assets? Would that even work legally, or how?
Yeah, so it's as Phunky was saying, it's kind of up to the portfolio managers to create a quote unquote basket or a fund, and every employer or every employee managed 401k plan will have a number of these, like retirement target 2050, retirement target 2055, et cetera. And the low, medium, and high risk buckets and things like that. The benefit for us as cryptocurrency sort of advocates is that in order to put that into a plan or put that into a program that somebody can buy into, you kind of have to aggregate a ton of the asset or a ton of the shares of the ETF, for example, in order to be able to provide that to people. So they're going to go out to buy these in bulk so that they can make them available to folks, and then there'll be sort of a monthly or quarterly cadence of how they're performing, how people are getting interested in them, what the market sentiment is, and then they'll find like the sweet spot in terms of how they want to allocate or index, et cetera. But this all moves toward a world where it's not just S&P 500 indexes and Bitcoin, it's S&P 500 indexes and maybe the coin 50, right? Like the other indexes of crypto are going to be part of this. And pretty soon you'll just be able to have an index of crypto that you could put into a 401k, so that single sleeve could just be your actual like crypto sleeve. And that way you can create different products and tools like that.
So you're also saying that we potentially, because they have to acquire that like to such a large extent, that we potentially could see some sort of sell-off in S&P 500 holdings just to acquire whatever digital asset index these portfolio managers are building.
I think so. I think there's also a lot of like cash available. There's a lot of cash on the sidelines here. So you're going to see portfolio managers trying to differentiate themselves and saying, well, what else can we build and what new ways can we be different in this space? Because, financial advising and this kind of stuff is very commoditized. So they're going to have to start to differentiate and sort of say, like, how can we, be better than the next person? And part of that is going to be using and creating unique portfolio construction that includes crypto in a dynamic way.
Yeah, that's a very good point, and I feel like I wanna double down on this, and I think we only have like 5 minutes left in the show, so let's stay on this topic because I think that is the most relevant for the day. This differentiation aspect that you mentioned is an important one. I feel like especially in the world where in the future we might see some sort of like blended ETF once we can do that from a regulatory standpoint, where you have your MSCI World with a 5% Bitcoin kicker in there. So as you said, you will have to have more creative, more performant, more marketable products in that. Do you see a risk with that now that not only digital assets but also other alternative assets can be included in 401k? That some portfolio managers will go further down the risk curve to try to basically achieve higher yield, and that this could actually become a risk factor? Don't you think that this is something that we'll see happening because there's like still a certain level of conservativeness with these portfolio management structures as ultimately their retirement plans?
It's funny. I saw a quote today on some forum that was basically saying like, what new way that we're going to have a record set of bankruptcies more than we have with like medical debt. So like medical debt is the number one use of bankruptcies in the United States. And their argument was that because you're going to be able to put alternative assets and more risky things in a portfolio in your 401k, that all of a sudden it's going to be the next leading bankruptcy costs in the country, which is absolutely ridiculous. The note that it would be really risky is absolutely true if your whole portfolio was consisting of those things.
Yeah.
And an asset manager is not going to say to you, hey, take all your 401k and put it in this small startup that's not trading, on an exchange or some like meme coin index that they create. They're going to say, here's your website and here's your set of allocations that you can choose. Take 60% and put it in the target 2055 date yield, return profile. And then put some in, a large market cap index or a small market cap index. And then, hey, put 4 or 5% in this alternative asset bucket that we have. And that alternative bucket is going to be asymmetric bets, right? They're going to be things that could go up 10% or 10 times, and they're things that could go down pretty significantly. But the whole point is that your portfolio isn't going to be totally comprised of these things. Now, the concern is that people don't listen to their advisors, right? And they do whatever they want to do, and they see that this is an opportunity to make a lot of money in an account that they can't really touch, right? Like it's tax advantage because you don't get access to it. So if I think, oh, this is a longer term play, it becomes easier to say like maybe I'll take more risk, especially if I'm younger, and that could be not ideal. But again, these are all things that maybe an employer, for example, could put a limit or a cap on those kinds of things to mitigate that stuff.
Yeah, that's very, very helpful commentary. Thank you so much for that, Matthew. Phunky, haven't heard from you in a while. Curious to check back in with you before we'll wrap the show for the day.
No, I mean, I'm really glad that Matthew was in the audience here today to kind of take over and steer the ship, knowing he has a lot of expertise in this. But I mean, this is kind of what I agree with everything he said, and I feel that that's one of the broader points I was going to make earlier is that Stats brought this up a while ago, probably a few months back when Sam was on the show and co-hosting one day, and he was saying how like just most people aren't going to be comfortable with the whole not your keys, not your coins, right? Like it is a daunting thing to try and manage a wallet. Like even just teaching Aaron the first time, like, okay, you got to write down these words and you got to store them somewhere safe. And, just these things to get her used to being able to use our wallets if something ever happened to me or whatever, and get access to our Bitcoin stack and all those things. I think it's just like my uncle, he was very curious about Bitcoin and he just bought IBIT. He's like, like this is, I believe that there's something here, and I just don't have the technical sophistication, nor do I even want to learn. Like I'd rather pay somebody a small fee to do this. And I think that's going to be the bulk of investors in general. Like they're starting to hear about it. They're starting to get more curious, but they're going to rely on folks like Matthew and their financial advisors who, hopefully there's, like I said, an army of Matthews out there in the coming years. Because I do think this is, getting to your question, Legendary, I think it's going to be 5 years. I think it's going to be 5 years easy before it becomes something that's everybody's widely comfortable with, including the financial advisors, and having those conversations with their clients. But I think that it's going to be something where, most people are going to be very cautious. They're probably going to stick to with what the financial advisor says. And, I'll put in 5% in this small bucket. And I think, to Matthew's point, I thought it was really insightful that, someday there's going to be a coin 50, right? Like there's just a single ETF that will be an indexed basket of funds. I think Grayscale has already tried to put together something like this where it is a basket. So, I think that that's where we're going to continue to see is the trend is that Wall Street is going to shape the industry in its own likeness and change things, even though that's going to destroy a good part of the original cypherpunk ethos. But for all the pragmatists out there, like, we're just happy that the bags keep going up, right? So I think at the end of the day, we're heading into an exciting and bright future, and something that we all would have wanted even just 3 years ago, right? Like, we all would have wanted to see Wall Street buy our bags. And so I think that it's in allowing people who maybe are scared and not technically sophisticated to be able to just now have access to, the digital asset space. I think is great.
Love it. And I'm gonna take this thought into the weekend, that there's an army of Matthews being educators and working.
I keep seeing like the agents, like, like in the Matrix when he like multiplies himself. Like, imagine just having millions of Matthews out there knocking on other doors of IRAs and be like, let me tell you about digital assets. That'd be amazing.
He could have some AI agent swarm, and we had ChatGPT 5 yesterday actually come out. So maybe we'll see that in the future. Look, thank you so much, Phunky, for co-hosting the show with me today. Thank you, Matthew, for stepping up and talking to us about the 401ks. Thanks to everyone in the audience, everyone in the YouTube comments. Still working on getting everyone into Telegram. Group is growing daily. So once more, be patient, bear with us. We'll get everyone in. We will also, as usual, upload the show to Spotify, to Apple Music, and we also, of course, going to be back on Monday, 7 a.m. Eastern Time, same place on X Spaces, live streamed on YouTube as well. In the meantime, have a great weekend and see you on Monday.